The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days, 11 o'clock till noon at 877-927-6648. Love to hear from you. This is a perfect time to call in. Why? There are so many factors going on here in this particular market. Look at the strength of the 120-minute chart. If you're looking at Tiger TV, look at that right-hand chart. That's the 120-minute chart. Look at the strength going to the 200-period exponential moving average at 1939. This is the E-mini S&P September future. Makes a peak C1, peak C2, double top. Special technique in the Chapman wave. No other technique does this, and that I know of. And then at the 200-period exponential moving average, it pulls back and treats it as a magnet line, and whoosh, it runs not only through that line, but we've gone peak D/A, peak E/B, peak F/C, and expecting at 1949 to 1951, leg D to unfold. And lo and behold, the high today so far is 1949.25. Leg B in the daily right up against the dash line resistance level. But the MACD, for the first time, it's taken 50 points. Almost 60 points for the MACD to actually get to touch the green line, to touch the red line. And yet the stochastic's still only at 48%. Either that's really bullish, or it says, be careful, we're about to bump into very strong resistance. My suspicion at this particular point is that even though there will be resistance, there's just enough strength in key stocks to at least make this a high-level consolidation before maybe early next week trying one more time to go a little higher. And if we go a lot higher into the 1957, 1960 area, there's no question about it. That is internal strength, and we could actually go higher after that. And I've been talking about this being a retracement, this being a bear phase bounce. But I'm always very flexible, and that's why we're lightened up and everything. We're trying to add to the longs, trying to add to shorts. Got a mixed portfolio. That's the way I want it right now. Most importantly, let me just draw this line here. You know this technique? You've been watching it for months, years actually. But look at this. I take those two lines and I join them. Higher highs and slightly lower highs. And that says right there, by about Friday, about late this morning, late after midnight into early morning, the resistance will be 1953. So right up until then, you've got a trend line, uptrend line that is hugging, that dashed line, the pink line. And you've got the gray line, which is the channel at inside track resistance area right there. And I'm going to make that red. But within that context, you've also got that falling axe pattern that I always talk about. Look at that, that expanding cone formation. So a lot's going on right here, and the 120-minute chart is saying stochastic at 85% is good. The MACD is flat and saying, yep, the trend hasn't changed, but it's really becoming limited to the upside. And this 200-period exponential moving average is like a sine wave. You go under it, you go over it, you come back and touch it, and that'll be the big clue as to what can happen after that. So let me run the numbers. The Dow's up 30 at 16,682. I say to my subscribers to my opening call, very comprehensive look at the markets every day, giving you parameters on the Dow, the diamonds, the SPY, the S&P, the GLD, the direction, the TLT, stocks that we've used as gauges of strength and weakness. as well as about 14 to 16 points in my final chart that I send out to my site at about 8:35 every morning, and that is the Trader's Corner. What positions we have, what we are changing, why we're changing, etc. So when I'm looking at this, I'm saying, great. There's been a tremendously strong leg A to leg B. There hasn't been a peak B yet in the daily chart of the E-mini. It's the same with the S&P, which is trading right now, up 5 at 1951, broke out of the resistance line. It's gone into leg B. MACD's just about to turn positive. Stochastics at 40%. It's good, but it's not great. I mean, it's not good. It's okay. And leg C, going to the 1955 level of the 200-period moving average in the 120-minute chart, and I have no choice but to put an up arrow in that says you should go to at least D. So there should be still further gains to be made sometime over the day. And now let's look at the QQQ. So the comp index right now is up 10 at 4,445. Up 0.29%, up 28 cents at 96.71 are the Qs, which broke out of the resistance of that falling axe and the inside track resistance. And now look what we've got. This is still leg B. This is what's really impressive about this whole move. One of the reasons why I didn't want to add, we tried going short yesterday. It wasn't successful. Small percentage loss, but you know what? I don't like losses. I don't want to take any chances right now until I get some clarity. I said today, the 5th day after the low bar, this is where we should get some clarity. Day is young. We'll see where we close. Meantime, this is leg B, and I'm calling it, this is a gray leg B because it's underneath the 97.51 and the 97.32 highs, recent highs in the 120-minute bar chart. But everything about it, the stochastic at 97% and the MACD still strong, says I wouldn't be going short the Qs at this particular point. People ask me about the QID. That is the short position, a double short position. No, I'm not looking at that right now. I want to see how this trend line resistance, which targets 97.32 by 3:30 tomorrow afternoon on the 14th, today, the 14th today. And that's going to be the clue. How it breaks that, if it's tomorrow, it'll be just a fractionally, slightly higher, and it'll go into, say 97.33 area. So the Q and support for the Qs are very strong at 96.20 to 96. So that's that. And we want you to look at the GCZ 14. And that GCZ 14 is the gold contract, December gold contract. And what do we have? We have it holding right. I've explained to you many, many times how important the 200-period exponential moving, not the simple. The simple is way down here at 1288 for the December gold. But the one that's the most impactful, where the prices bounced off every single time back in late June into mid-July, and then broke down and then became a repellent line all the way to today, since it broke down on the 14th of July. That is a beautiful thing. You just put one trend line up that has significance, that's robust, and it can give you an incredible amount of information. I've been saying gold is in a trading range. It's doing quite well considering that the dollar, and I'm going to explain something now. This is, it's not Technical Friday, but I want to explain something about the dollar. Remember I said that in my technique, the Chapman wave methodology, I spend a tremendous amount of time on the MACD, the moving average convergence divergence. You'll find a tremendous amount of information about the MACD and the 9-period differential that I call the fast-moving average. It is a faster-moving average, but that's not really its significance. Its significance is a vertical strength or weakness gauge that is called the 9-period differential, made up of the 26 and 12 moving averages. But look at this. That MACD, in this particular chart, you have the S&P way back in 2005, shows that the MACD was expanding. That fast-moving average, light gray in this case, and the black one, the slow-moving average, gave a tremendous expansion. And that says that the stochastic, which is that's where you get your torque from, first gear, second gear. But you get the real momentum once that MACD, fast-moving average, starts to rally above the slow-moving average. And look what happens. It goes peak A, B, C, D, E, and even an F. And only at F does it cross negative. And what I'd said is that over the years, many years, and especially in my Master Trader series where I can take a lot of time to show it, we can actually look at it live many times in shorter time frames. But when you get this big expansion and you go all the way to an instant restart that has no dip at all in that fast-moving average, it says don't expect that you're going to make a D, because you're going to make all the way to a G/C probably, and that's where you might stall. You might make a D, but you don't have to, because everything starts to fail once you get to that peak F. And that's exactly what happened. Look, the stochastic's pulling back. It's at 77% in the dollar index. And right now it's trading at 81.50, down 10 cents. But for 1, 2, 3, 4, 5, 6 sessions after this incredible bout of strength, look, the dollar hasn't been able to break 81.72. It went to 81.69, 3 cents away from breaking to a leg D, and it couldn't do it today. And the 120-minute chart made a double top in this pattern that I call the cup formation. And now look what's happened. You've made an arch formation. It looks to me like the dollar wants to test the 81.36 level, and that's going to be really important. And while I'm doing this, let me just show you something else. EUR-USD, the euro-dollar currency pair, hasn't been able to show strength. Folks, I can tell you this, and I bet Larry comes on after me, and I would not be surprised if Larry also would say that he, in all the decades that he's been trading, it's not that often that you will not get the counterpoint moves in many of these currencies and commodities that you should be getting right now. The dollar showing this kind of strength should have had gold pulling back. Should have had gold pulling back GCZ 14 quite sharply. And in fact, gold is held beautifully on that 200-period exponential moving average in the daily, and the 120-minute chart has acted as a propellant. The euro, with the dollar so strong, should have been making lower lows and lower lows and lows. And look what's happened. It's gone to that low of 1.33323, and it went to a low of 1.33353. It hasn't been able to break to a lower low. Isn't that interesting? Now, look, here is trying its best to get to the 200-period moving average at 1.341, whereas the dollar was using that as a propellant before. Now it's a repellent. This is a fascinating market. When have you seen the dollar rally like this and the general stock market move up at the same time? Doesn't happen that often. We are looking at a most unusual market. Dow up 34, S&P up 5 3/4. We'll be right back. Basil Chapman, Tiger Technicians Hour, and there are a couple of things I want to look at here, which I got to review, and we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, a couple of things that I wanted to mention. First of all, Chris, I did discuss the TRIN yesterday. Today in my opening call, a question about the TRIN. Why was it rallying like that? Occasionally it happens, especially as you're getting into options expiration. I need to take a little time. I certainly won't have it for the next week or so, but I will take time and study some of those changes that occur in the TRIN as you're getting to options expiration. The Wednesday, but especially the Thursday and especially the Friday, these things do happen. But most importantly, none of the numbers that I use in my Chapman Wave TRIN gauge were hit, so that had nothing to do with it. But it was a good question. Why is the TRIN rallying, and yet the market is up quite strongly, actually quite very strong yesterday? And that has to do, I think it has to do more with options expiration. Probably I should ask Dave White the question, but I believe it has to do with the mix of buying that goes on as you get closer to options expiration. So I'll look into that. But my reading was that I had no reading. And the next thing is, Jeff had emailed me to ask about the QQQs. Said the QQQ head and shoulder top near perfect daily. 94 is the neck. Yep. I agree. But you know what? It's not my favorite pattern, and I'd rather be looking at it as strength in leg. B right now. Let me just go back to the Qs. Oh, I hope I'm not going to forget where I am here. QQQ. Yeah, this is a very strong leg B. Broke that resistance, and the 120-minute chart is only in B. This is strength. I mean, I'm not going to deny it. Right there, that's strength. Even though the stochastic's not that great and the MACD hasn't turned positive, there's enough residual strength in the 120-minute chart to, even if there's a pullback, to make nominal new highs. Then, Dan, thank you so much for that. Every once in a while, Dan sends me information about the housing market, or what I've been looking at for decades, and that's the stock market peaks. If you're really interested in this, in the book called The Psychology of Investing, published by Wiley, Lifson was the editor. I have chapter 13. This was written back in 1987, 86 and 87, a chapter that I added just a little bit to in 1989, looking for, was it, 89? 1990. When did I add to it? When was that published? That was published in 1999. So what I'd been expecting was that the Dow would break out, but most importantly is the whole thing on skyscrapers, man's icon, a time freeze to his ego. Anyway, Dan sends me the stuff, and he just sent a fabulous thing. He says, I don't know if you noticed this in the Wall Street Journal. I saw that they were pre-selling condos for the yet-to-be-built Vancouver house high-rise. Some were going as high as $18 million. They sold 10 units already. Not sure if any were sold at the 18 million price tag, though. And then he updated me this morning to say, and this is at the opposite end of the spectrum of the skyscraper thesis. I thought, what does he mean by that? Then I realized, of course, because it's not going anywhere in height, but it is the rise of the $1 million mobile home. $1 million mobile, let me say that again. This is the rise of the $1 million mobile home. Mobile home communities are attracting a new, wealthier buyers. Prices soar in prime locations. Makes sense, doesn't it? But $1 million. All right. So we've got a bunch of things I want to look at, and we'll do it in conjunction with our callers today, or whenever I find time. Some fascinating things I just wanted to show very briefly. First, we'll go to Mark in Denver. Mark, how are you?
Good, Basil. How are you?
I'm well, thank you.
Good. So we talked earlier about Solar City. I think earlier in the week.
Solar City, right? SCTY, yes.
Yeah, and I played it for a nice bounce, took some profits, and then I was watching it today, and it came down and tested that big bar from the 8th, which had a lot of volume. It got down right to the lows. Actually, it got down lower than that, and it. A tad
lower, right? 69.52 was the low, yeah. And today's low is 69.10. Yep.
Yep, and I grabbed some when it held that low on a 15-minute bar, and I actually just bought some call options for tomorrow, and right now I'm at about a double or close to it. And I'm wondering what your thoughts are through, just your technique as to where you think this could go by close tomorrow.
Okay, two things. Number one is, when we discussed it, it was still in the stage where I was disappointed that it pulled back that much, and you got at the low of the 8th, and you ran it, and you took profits. You're out, and then you got right back in as it hit. Folks, look at this. Look at this let me double check. This is the 32-period exponential moving average, the little dashed red line. It went right to that level, and then it bounced and stopped dead at the 9-period moving average. So we'll be back. We'll talk with Mark in Denver about Solar City SCTY, trading at 71.50, up 41 cents. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, we're back. We're looking at SCTY, which is Solar City Corporation. And before we get, that's with Mark in Denver, but before we even move a second on, I forgot to also mention, I thought I had, but I realize now that I didn't. And that is something maybe Larry will also talk about in his work. And how often have you seen bonds rally and the stock market rally at the same time? So it's only in this Fed-induced phase that you get this kind of convergence rather than a divergence. So fascinating things are going on here. We're going to go back to Solar City. And Mark, I'm so sorry I didn't do this before the break, because 6 or 8 cents makes quite a big difference when you're involved in options. I was going to say to you, grab some of your options right now. Take it off. And you can always put it back, but at least you're getting yourself a really good profit. That's number one. And number two is, I'm showing a chart here of the 30 minutes that I just did on Solar City. And what it shows is from the low bar of at 11 o'clock on the 4th of July at 67.80, there was a series of higher peaks. And then this kind of, let me see how it's looking. Yeah, you can see it looks like a gray fuzzy line with dashed line and the gray line in the middle and dashed blue lines surrounding it like little Bollinger Bands. That's some work that I had asked Herb to do for me some time ago on the 200-period exponential moving average. I was going to do a scan in it, and I haven't actually followed up on that this years now. It's over 2 years maybe that I did this. But whenever I pick up this chart, I say, oh, man, you've got to do that work for the scan. But look how beautifully it went to a peak D. In the 30-minute chart, SCTY made a high at 71.55 at noon on the 5th of August, pulls back away from that 200-period moving average, is attracted to it. There's a big candle here that says this cannot be the low bar cannot be a high bar, so you have to wait for a low to form and forms a brand new ABC, and then you get that rogue wave spike to a D, so that even if you had an alternate count, you would have got to a G successfully. You would have been correct in thinking, hey, this is a great short for now on the 30-minute chart because you have fading technicals everywhere. And then there's this one news-related spike to the top, and it takes it to 79.40 at 10 o'clock on the 8th, and then it plunges. It goes all the way from 78.40 down to 69.52. That is a big hit. Then it has a big spike up, a relief rally, pulls back, and then it comes down to 70.06 at 3 o'clock on the 12th, and it rallies to A and B, pulls back, comes back to this exact 200-period moving average this morning at 71.89. The high today so far is 71.88, missed it by 1 penny, and it's pulling back. So I'm looking at this 200-period moving average, and I'm saying Solar City seems to have a lot of resistance. Now, the big thing is, if it breaks and closes, that's why I say take part of your position off. Why? Because if there's another burst of strength and it's able to get to 72.40, then it's breaking away from that level, and it should try for the recent highs of 73.75 and 74.25. It's a big if, because I think this market right now on the day is starting to look quite toppy, and Solar City might be in that category. So that's the reason. But if you're holding, you got September's?
No, they expire tomorrow.
Oh, then grab your profits while you can.
That's what I was thinking.
I shouldn't have spent the time talking. But yeah, you know why? You can keep maybe one or two, because that's the risk factor for white lightning, and Solar City is attempting to climb back into the body of that ugly candle of the 8th, which opened at 76.11. But basically, you want to look at the next day, and that closing level was 73.40. So 73 to 73.40 is where I would exit, or at least I'd really tighten up the stops on any call that you have if you're still holding it in tomorrow. But as it stands right now, taking profits on a great trade like that, beautiful thing to do.
Great.
So,
Thank you.
So as it stands right now, I wanted to also mention a couple of things. Number one is you've had a number of these really good trades that you've put on based on your own work. You get a little bit of analysis from what I'm looking at, but it's really your own work. What I like to think of is that very often it works twice. The third time it might work, but you're getting to be a little bit on automatic pilot.
Right.
So that you want to temper it by remembering that the trading gods are looking at you very, very. Now you're like the IRS. You're under suspicion. So you're going to have to say to yourself, okay, keep hubris in mind.
Yep.
Don't pat yourself on the back, because you know my expression. The moment you take your hands off the wheel to pat yourself on the back, that's when you hit the tree.
Oh, yeah.
So just keep that in mind and keep doing the analysis part of it, not the patting yourself on the back, because the markets do not like that.
Sounds good. And if you get a moment later, if you want to talk about where the IBB is. Do you think it's going to top here, or do you think it's going to go all the way to the high?
You know, I was going to do the IBB because it is a very important part of both, not just because it's the IBB is the NASDAQ iShares, but a lot of the NASDAQ biotechs are actually not four-letter names. Not a lot, but there are a great number of major ones that are not four-letter names, but there are a lot that are. So I'm going to talk about, in fact, I'll talk about it right now. You don't have any position, right?
No, I've been kind of patiently waiting.
Yeah, patience is the name of the game. Absolutely.
I didn't take your trade the other day because I wanted to see if it got to this 260 level. And
let me tell folks, yesterday we shorted the IBB at 255.01. I had a very tight 2.10 stop. That's like not even 1%. It's like 0.8%. And we did get stopped out very quickly. And it soared. It just kept going and went all the way to 257.59. And now it's trading at 259.56, having hit 260.34. Now, what's fascinating about this chart is that there's another reason why I think that I've got to temper my disposition right now to want to short, mostly because individual stock names fine, but the indexes, there's enough rotational strength here that says if we don't close down 30 or more points in the Dow today, more like 4.75 on the downside rather than being on the upside right now in the S&P. If it's just, I thought there'd be a fairly modest close between a whippy zigzag day and a fairly just like a doji type close, because that would make tomorrow really important. But when you've got this strength, and let me explain what I'm looking at. In the IBB, this is the IBB is the iShares NASDAQ Biotech ETF. The low that was made at 247.48 at 13:30 on the 1st of August, and then at 247.35, fractionally lower. That's that H pattern that I always talk about, and the H pattern can very often produce some very interesting moves. One is that if it continues lower in the next 1 or 2 sessions from that bar that took out the left side low, be careful, because what could very quickly happen is that you suddenly find yourself making, that's kind of a head and shoulders pattern where it breaks the left side low bar and remains down. That's very negative. But if there is not just a turnaround, but there's actually a buy signal in a shorter time frame, in this case the 120-minute chart, unlike the daily, the 120-minute chart was having improved technicals, the MACD and the slow stochastic, as it went to the low. And that was a second up arrow buy signal, and it's gone A, B, C, and now it's in leg D. This is going to be, I have to tell you, this options expiration is going to be such an interesting one, because you have the weight of, whenever people say they are going to this and they are going to that, I always look around and say, we are the they. We are the ones. And that's exactly the same in the options trading room. These guys don't really know which way the market's going, but if there's a tilting point, a fulcrum level, or a 200-period moving average that acts as a repellent or a propellant, all they do is they say, oh, we're going up, and they immediately nudge the market. That's the they, and that's all of us, because when it's going up, we want to be buying. When it's going down, we want to be shorting. So that's going to make today, this afternoon, between 3:10 and tomorrow between, I'd say between 10:10 and 10:50, really important, because it's going to give us clues to the internal strength based on the options, and it's going to give us a sense of the market strength based on the larger tide. And you're in leg D, having bumped almost at the 260.81 resistance back on the 30th of July. There's this triple top that's forming in the 120-minute chart. Let me just draw it right across. There it is. A cup formation with a triple top. They can be, I wouldn't say deadly, but they can be quite potent if there is a significant turn down. And the only way you know that there's a significant turn down is if today's low on the IBB of 257.01 is taken out decisively, and that bar closes sharply below it. Then you'll go back to the 254.24 level of the 9-period moving average. But if there's anything like even a doji close tomorrow and Monday is up, that says, hey, this is just an unrelenting buy mode in the IBB. And I was sure that we're making a rectangle formation and that we would be repelled back to the downside. But now we're getting into the weekly chart, that inside track that I talk about, with lower lows and much lower highs and much lower lows. Well, 275.40 was the high on the 28th of February. We had initially shorted it at 271 and watched it go all the way down to 207 and only covered late instead of taking that big 20% plus profit. Now what we're looking at is a declining cup and handle. They are not often found. They're quite rare. But in this particular instance, if there is a break above 263.90, let's call it 264 in the weekly chart, then immediately you have to say, it looks like you're going to make a new leg C above 266.43. That's why I'm saying this is such an important period, because you've got the bonds. If you don't mind, I'm going to use this just to take all the data I'm looking at, because bonds in the monthly chart are making a similar attempt to break a downtrend with a falling axe formation with lower lows and much lower highs and much lower lows. And if bonds are able by next week to climb, instead of being stopped at, this is a continuous contract, at 139 and 22.30 seconds, if it actually breaks and closes above the wick of the candle of the 8th and goes above 140 and 11.30 seconds, my guess is that you'll see something quite similar in the IBB as it breaks above 266.70 to start another leg up, because they all seem to be working in unison now. And then you might even find that the dollar does break to the upside. But right now it's fascinating, because the dollar has not broken to a new recovery high, as that formation I was talking about with a peak G likely, rather than going to the Ds unfolding. So if the dollar breaks down, the euro starts to rally, and bonds pull back, we might start to see the market itself turn down. And then I have to add the VIX index, VIX, which is at 1282, right in this area between 1280 and 1230. That's where the VIX has tremendous support. So this is definitely, for me, a very critical day in terms of where the market closes and where we are tomorrow within about the first 2 hours. So to answer your question, IBB is important. Those are the parameters I'd be looking at. The Qs are important. Broken out already. Wow, the Qs look like they really do want to test the recovery high of 97.51. But there's a lot that can happen between here and 1 point higher. So I'm going to be watching this very closely. Hope that helps you in some way.
Yeah, you've been great. Thank you.
Thank you, and I'm sorry for keeping you so long, but thank you, Mark, in Denver. Let's go to Scott in Safety Harbor. Scott, how are you?
How are you, Basil?
I'm well, thank you.
Geez, so many things going on. I was going to have you look at Apple.
Yep.
But I'm more concerned with, because Apple, I mean, we all know Apple's going to go up sooner or later, but I'm more concerned with APA, Apache.
Oh, that's very interesting. I want to look at...
Talk about interesting. I mean, everybody's so perplexing, including you and I. I mean, gas should be $10 a gallon right now. ISIS they've taken over. I mean, they're running everybody out of the oil fields. It's making no sense at all that these oil servicers and crude is down. It just makes no sense.
You know, you've pinpointed something that is actually going on in the market. In my newsletter today, I don't know if I've got it in front of me. In my newsletter today, let me see if I can find that. I have discussed something that it's the selectivity of this move to the upside. And what I'd said is that today's action might tell us if there is a chance of legs C and D still to come in the daily chart of the Dow and the S&P. But you've got some support with stocks like Beta, B-I-T-A, Berkshire Hathaway B shares, Car, that's Avis, Rent a Car, LinkedIn, and SWKS. That is, what is SWKS? It's one of the IBD leaders. It is Skyworks Solutions. And this, here again, it's the same sort of thing, that even within sectors, you've got this diversity. So we've got a break coming up. I'd like very much to look at
hold on,
because it made a round number 104. high, and then it snuck to 104.57. I'll be right back. We've got Scott and Safety Harbor looking at APA.
Take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back. We're back with Scott in Safety Harbor, Florida, and we're looking at APA. APA is Apache Corps involved in the, they do the drilling, right?
Yeah, they're a servicer. You know, my theory on the oil thing is every time we really start getting those high gas prices, all the solar stocks start surging, new technology opens up, and I really believe OPEC, when they every single year when they see people getting excited about solar, they turn down the volume on the gas, and what happens then? People don't want alternative energy. They don't want to drive a Prius. They don't want batteries.
That's great. That's a great observation, and I've been looking at this, and I'm saying to myself, what a dichotomy. I'm looking at the roads, and I'm seeing smaller and smaller cars. In fact, the Mini Cooper around here has become a real favorite. I'm just looking at people driving them all over the show. Mm-hmm. And then you've got the higher end, and what a mix we've got here. And the higher end, of course, has greater fuel, lesser fuel efficiency, and the lower end has greater fuel efficiency. So
but I think about supply back to OPEC and the price now. Even though they do that every year, and especially right now at vacation time when it's very, that's when it's really somebody in somebody's vision, okay, when they go on a trip and it's like instead of $300 they go to grandmother's house. Gee, we only spent $150. We got that F-150 pickup. We're not going to trade down for a smaller one. We're going to stay here. Anyway, all that said, I think that OPEC, even though they've turned down the price, I don't think they're going to be able to, that's sustainable with everything that's happening over there right now. And I really believe, I'm going into Apache heavy today. I'm telling you the truth.
So let me just tell you what I'd be looking at in Apache. At this particular point, I think a little bit more. If you're building a position, that's one thing, because, peak C and or leg C in the monthly and so forth, the technicals are still very good, and that's the larger tide. Shorter term, 97.32 is trading at 98.52, so you've got about a point of risk. The only thing I would say to you is, regardless of what your theories are, on a purely technical basis, if I see 96 being traded, and the MACD and the stochastic haven't started to flatten out, then I'm saying, you've got to be a little careful, because the candle, that doji candle of 95.75 back on the 12th of June, that's going to be important, because there's a little bit of a gap between the 95.60 low and the 95.60 high and 95.75 low. So that's an area that could be tested.
Now you do see this trading range for the last month. It's been bouncing between the 98 and 101 for a month.
That's why I'm saying to you, I know that you're looking at that same support I'm looking at between 97.50 to 97.32. That's what you want to become a trampoline. You want it to be a trampoline cushion, so it hits it, even if intraday it goes underneath, you want it to close above, and within 3 trading days of the test, you want to see it back at 99.74 to 100.75. Then you've got yourself a fabulous position. But if it starts to hold under, I'd be a little cautious, only in that it's the first time the weekly chart is actually testing and possibly going to break and close under the 9-period moving average. And that, to me, would just be a sign to say, hey, be careful. You could still have another bounce, but watch out in case the trend changes. And that's exactly speaking to your point. Maybe tomorrow or next week I'll get a little bit more, because I wanted to talk about how the solar stocks, how the big oil companies, what could be going on. And one of those companies, Chevron, one of them, is just going to have to take over one of the solar companies, I think, at some point.
I would. Well, you know what? I really, I'm going to use an absolutely clear, transparent analogy here.
What? Make it quick. We've got a break.
Why it doesn't happen. Beef people are never going to get in the vegan business.
That's a wonderful point. Exactly right. So, hey, thanks for the call and good luck with this trade. I think you have something as long as the whole support. Folks, you've got Larry Pesavento coming up. Should be a wonderful program as always with Larry. Hey, thanks for being here. Check out my opening call. I'll be back later in the day. So have a great day, and I'll...
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.